How's it going, everyone? My name is Jake with Trade Confident.io. Today is going to be part 3 of why we think Bitcoin could be seeing a pretty significant drop, at least to $19,568. Now, this information was actually submitted by a member. We really appreciate your insight. And if you, as a watcher, have any insights on where you think Bitcoin could be heading next, shoot us an email at btradeconfident@gmail.com and we may just feature it in a video. Before we get started, just a couple of announcements. First, we're going to head over to the website and to our future forecast tab. There's a brand new future forecast video. It is essential that you watch this. Not good news. The Bitcoin spot ETF just got ... This morning, we just got some unfortunate news about the spot Bitcoin ETF that is going to put a damper on everyone's spirits and could be the catalyst that plunges us down to $21,000. We only have 2 points of saving grace for Bitcoin to stay propped up, and if we break these two areas, some of you could see your accounts lose tens of thousands of dollars. I'll show you exactly what these two areas are and tell you what I plan on doing to accommodate this very hard September coming ahead of us. This is when you want to be following every future forecast video since things can change very fast. Let's dive in. Second announcement, we have an indicator sale coming up. Now, members are actually going to get access to the coupon codes early. There's only a limit of 100 coupons available, so we want to make sure our members get access to it first. In the future forecast here, we actually tell you the coupon code so you can be the first in line. Snag a membership at the links in the description down below if you want to check this out. I highly recommend it. It's crucial information for your trades. With that, let's dive in. First, I want to talk to you about the indicators. Price versus money flow has risen quite a bit. We saw a price move up, but a sudden drop has taken over, and we're currently testing structure support at $24,821. At the same time, we're seeing a 51% chance of a drop, and when you're seeing somewhat bearish signals as you're testing structure support, this is often likely we're going to see a drop in price. So that is bearish. Now, in part 1 of this video, we talked about this rising wedge pattern. These are most often bearish, and we saw a break, a retest, and typically that will result in a much larger break to the downside, often as far as its lowest point of support right here around $15,460. In yesterday's video, part 2, we went over the CME gaps. Most often when you see a gap in price like we saw back here, the price eventually actually fills it. You'll see the price intersect and actually surpassed the top and bottom of this gap. That's what a fill means. It happens right here. Boom, fill. There's a bunch of little ones like right here. It's got filled a little bit later. Even this gap just a few days ago was filled recently as well. However, there is a gap right here between the values of 20,300 and 21,110 that has yet to be filled, and this falls exactly in line if we head back to spot with a prediction of $19,568. If you haven't seen part 1 or 2 of those videos, I go much more in depth of these two concepts. You can find those videos at the links in the description down below. And with that, let's talk about the next bearish point on Bitcoin. Heading over to the 1 week time frame. I'm going to expand the chart and I'm going to scroll down a little bit just so we can see this bit easier. Now, one of our subscribers, Brandon, I really appreciate you, commented on our videos recently. He talked about a bear flag that started at the very top, the all-time high of Bitcoin, and bottomed out right about here around $34,000. Now, the way you predict a bear flag is actually to take the flagpole here and then put it to the point of breakout. If we do that, take the flagpole, put it to the point of breakout, we could see a massive possible drop on Bitcoin. This level actually puts us at $2,339, and I'm going to be honest with you, I don't think that's very likely, and because of that, we're actually going to scoot this up a bit to the structure resistance here on the bear flag. This puts us at a much more reasonable around $13,000 for the bottom. If you've been following me for a while, especially around this point, you know I've been talking about $12,000 for a long time. I do not think that's completely out of the cards. I think it is still possible, especially if this bear flag has not fully played out. Combine that with the rising wedge pattern here that would typically bottom out around $15,000. I think anywhere around the $15,000 to $13,000 range is absolutely possible. If we bring back the rest of the indicators, you'll see price versus while money flow is high and moving down. Where well money goes, the price is likely to go too. And if we're testing a structure support while well money is dropping, it's very likely we're going to see a break to the downside. Now, I've been very conservative in these estimates, and this is the reason I'm only expecting a drop, at least as of right now, to 19,568. The data that you'll see in the future forecast is also going to support this. price. Now, as we approach that structure support, we will need to reassess the fundamentals and the technicals of the market. If we're still seeing price versus well money flow dropping, it's very possible we could see that full drop all the way down to the $15,000 level. Now, I know that's really scary, but we have some really strong risk management strategies I'm going to show you just really quick. I'm going to take away the drawings just to make it easier to see. Go over to the TC top and bottom finder, turn that on, and then add the show take profit, market order, buy limit 1 and buy limit 2 settings. Now, if you decide to trade this market, there is still a possibility we're sitting at a previous structure support where we got a buy signal. There is a possibility of a move up here. Nothing is guaranteed in the crypto market. If you decide to take a trade, and I'm not saying you should, this is not financial advice, but if you do, the way we like to do this is actually split our investment into 3 equal parts. The first part is going to be entered as a market order. This means you enter at exactly the current price immediately. And the 2 other parts are split equally between buy limit 1 and buy limit 2. Now, a buy limit allows you to walk away from the charts, and if the price drops below the buy limit level, it'll automatically enter the amount you said to. Now, the way this fits into the strategy is allowing you to dollar cost average immediately into the market if the price drops. Once you have all that set, you just set your take profit for however much is currently entered. Now, the reason this risk management strategy is really cool is if the price moves up to that take profit, you just make your profit and re-enter the next trade. Super easy. But if the price drops, let's say it drops below the $19,500 level. This is the exact level that we're watching for a possible drop in Bitcoin. If the price drops below this, 2 things are going to happen, and both of them are extremely beneficial for your account. 1, your break even is going to drop. It's actually going to average out between these 2 prices because you entered the same amount. And it'll actually be a little bit lower because you entered the same amount of money at a lower price. You actually purchase more coins. Instead of being in profit around $25,000, you'll actually be in profit closer to $22,000, right about here. This means after the price drops, the price only needs to reach about here to be in profit. You're going to be in profit faster. And on top of that, you're going to have twice the amount of money invested into Bitcoin. This effectively doubles your profit potential, not even including the lower break-even point. If the price drops below 13,000, I really hope it doesn't, but if it does, you just get into an even better position, and think of the long-term returns. Absolutely insane. So that's the risk management strategy we're using to make money no matter what happens in this market. So that's part 3. We have a lot going on in the market. We've got the rising wedge pattern. We've got the bear flag pattern that still has yet to fully play out. We have the CME futures gap that we need to pay attention to, and all of this points to a pretty dramatic drop in the market. Now, as this plays out, you're going to need our state-of-the-art indicators. These are the indicators that have allowed our members to win 67 wins, 0 losses on our scalping trade record. A sale is coming up really soon, the biggest sale we've ever done on our pro indicator pack so far. You can snag them at the links in the description down below. Just go ahead and scroll down here, click more, and the indicators will be the second link. Click that. It'll bring you to our Pro Indicators page. Now scroll down here. I'm going to show you how to get the best possible deal. Starting Monday morning, our members are actually going to get $200 off. Non-members will get $100 off. Significant discounts here. It's much cheaper to purchase a membership, grab this discount than it is for non-members. I highly recommend that. Then you can also view our amazing future forecast video. It's going to be essential knowledge for your trades moving forward. Once you have a membership, click access coupon code, write it down, and then click Pro Indicator Pack. From there, you just need to click I want this. Add the discount code here and then fill in your information. Click pay, and it's going to offer you the TC top and bottom finder for an additional $400 off. Now, starting Sunday night, this is a total of $600 off our indicators. Absolutely ridiculous deal. An absolute steal on these state-of-the-art indicators. Just click add to cart, follow the prompts, and we're so excited to trade with you soon. With that, I just want to say thanks so much for watching. Trade safe, trade confident. We'll see you in the next video.